Hello, and welcome to an all-new episode of the Transfix Take podcast, where we are performance-driven. It's the week of June 7th, and we are bringing you news, insights, and trends for shippers and carriers from our market expert, Justin Mays. Mays, we have reached the 100th episode threshold. What's going on?
Hey, Jenny, it's great to be back with you as well this week to record episode 101. And there's still a little bit of volatility in the market, so let's get into it.
Listen, at this point, I will take volatility over stagnation. What is going on? I know that we saw a couple of weird things in May.
That's right, Jenny. In May, we saw a extremely rapid decrease through the first half in rates, and capacity was extremely loose throughout the entire country, with the exception of a few markets that are in the south and southeast. And going into the end of May, we saw some volatility brought on by DOT week and Memorial Day weekend, where carriers were able to apply pressure and really push up spot rates.
And it's been a while since we've spoken about the spot market, so what's the national average there?
Well, Jenny, spot rates went up to $1.64 for line haul. That's up 10% from the lows that we saw in mid-May right before DOT week. And actually, Jenny, I'm surprised that carriers are still able to be applying pressure now that we're in week 2 of June. I anticipated continued pressure through the first couple of days of June, and we are seeing some relief. So I don't want to say that, rates are not decreasing, but they are definitely holding on to higher rates longer than originally I would have suspected.
And you know what, Mays, this is really good news for carriers. I understand that this is a lower average than what we would normally expect prior to the pandemic or even in the middle of the pandemic, but there's some improvement. And so I'm curious to know what the average line haul rate is and where that's sitting right now.
Now, again, rates are currently at $1.64 a mile line haul only, but I do anticipate rates to see a continuous trend downward over the next 2 weeks and give back about 5% of the increase we witnessed through DOT week and the Memorial Day weekend. Now, again, that's going to be on a market-to-market lane and what region the shipment is picking up and delivering to.
And with that, you know what it's time for? The regional breakdown, Mays. Let's get into it.
Let's do it, Jenny. Let's jump right into the regional recap. This week, I am going to change it up, though. We usually start in the Northeast because that is where Transfix originated out of. But this week, I'm going to take a turn and start in the Southeast. The reason being is that over the last month, we continued to talk about especially Florida heating up and capacity being tighter, most likely related to produce season. But last week I did call out slight declines in the average rate, but also capacity just loosening out overall. Now, I didn't hold too much weight on that, but this week we're seeing this continue. And not only are rates continuing to see decline in looseness, but capacity as well is seeing a decline as tender rejections out of most markets in the Southeast witness declines week over week.
And now I specifically remember us calling out Florida. So what are we seeing there and what has changed over the last week or so?
That's right, Jenny. The Sunshine State, Florida, was experiencing a freight market very similar to the weather there, as the freight market was hot and drivers could demand higher rates leaving the state of Florida. But that has since changed, and I think at this point we're going to continue to see that. I just don't think it's going to be large decreases, just small declines over the next 2 weeks.
All right, something to look out for, but why don't we head on down to the West Coast now? We've seen some tightening, specifically in the southern and northern part of California, and there's a lot happening over in that region. Let's talk about it.
Now, we are seeing slim declines as capacity loosens up, especially out of the state of California. On the flip side, freight heading into the West Coast, especially California, drivers are still able to demand higher rates. But that may not last much longer if we continue to see a gradual, slow decline of outbound rates of the West Coast. Now, that is California and the Pacific Northwest. Arizona tells a slightly different story. Arizona, we are still seeing a capacity crunch with rising rates.
Now, I just want to take a quick moment to specifically call out things that are happening in California. What we're seeing right now is a growing number of slowdowns at different ports throughout the state. Relative to the port negotiations and longshoremen unions. So what we're going to see there is a likelihood of upward tender rejections and a slowdown in volumes that could result in higher rates for carriers. But we will see what's going down in the next couple of weeks. That said, why don't we drive on down to the southern region?
The South is continuing to see some pressure, and carriers are still enjoying higher rates coming into this week, and I don't think we're going to see much of a change through next week. Now, the South has been flipping back and forth, but I do believe that the South and parts of the West like Arizona are going to continue to remain a little bit tighter than the rest of the nation for the coming 2 weeks.
Looks like we'll have a lot to report on in the next 2 weeks, but what's going down in the Midwest, Maze?
The Midwest is definitely a market that we would suspect quicker declines following the volatility from Memorial Day weekend, but it's actually stayed pretty relatively flat. Now, coming into this week, I do expect to see greater declines in the Midwest, along with the Northeast, than most other outbound regions. And freight going to the West Coast right now is ideal for drivers as rates are high, but they need to keep an eye on what the market's doing out of California and the rest of the West Coast, because these rates will not continue to move in their favor.
All right, and let's go to where we would have normally started out in the Northeast region.
We expect rates to continue slim declines at the beginning of this week, but then gradually start to pick up. Now, parts of Pennsylvania, such as the Harrisburg and Allentown market, are seeing higher volumes, leading to very slim increases from last week to this week. But I assure you, over the next 2 weeks, we're going to see noticeable declines. Now, the Northeast has such a large density of population, most of that freight stays within the Northeast. So it's not going to really change the factor of where rates have been going on freight leaving the Northeast to other regions. But I will call out that freight going down to the Southeast, especially Florida, has certainly taken a turn for the worst for shippers.
This is a good call out, and let's get into why this was bad for shippers.
2 weeks ago, that was one of the most ideal lanes for shippers as rates were plummeting from the Northeast to the Southeast. But over the last 2 weeks, we have seen continued increased pressure on rates. But to the South and to the West Coast, rates continue to decline.
Okay, and why don't we wrap on up with the coastal region?
This region has actually seen the largest decline over the past week, and this will continue throughout the remainder of the month, I believe. The larger markets like Charlotte will continue to drive rates relatively down throughout the entire region. Now, markets closer to the Northeast are still feeling a little bit of pressure around Northern Virginia and Maryland and Delaware, but this will not continue as the Northeast starts to decline this week as well.
So you know what? It seems like June is going to be a very interesting month, especially as we get closer to Independence Day and what that will look like pre and post holiday. But I know that we touched on it a little bit earlier with California. Let's get into what's happening over there, specifically with the ports.
That's right, Jenny. We are hearing a little rumbling about the ports out on the West Coast again, although it's a different story than we traditionally talked about throughout the prior years when we were witnessing disruption due to COVID. On the import side, we continue to not see any significant resurgence of freight coming inbound as inventory levels continue to be relatively high. And to be honest, Jenny, I do believe that the second half of this year, we could actually see a worsened ocean spot rate market through Q3.
That's right, Maze. And looking at May, year over year, we surprisingly saw a 7.5% decrease in imports from China. And that's because inventory levels in the US are sitting pretty strong right now. So earlier I said this could impact the truckload sector towards the end of the year, but I'm curious to know what you think.
The noise that we hear is coming from the continued labor union negotiating talks. But there won't be much of a spillover to the truckload market because the industry overall has excess capacity, and it was very short-lived. Now, it's only really going to have an impact on the importers themselves. As those ships get turned away from the docks, they have to pay for the container vessels to hold that freight for a longer period of time.
Now, I know that Maze and I are speculating on whether or not this would impact the trucking sector. Right now, it looks like no. However, we could see this change towards the end of the year, like Maze said, or in Q1 of next year, especially as these negotiations continue. Remember, we are on a year of these negotiations. Should this go into 2 years, we're not quite sure how that will impact the ports over on the West Coast. But Maze, I know that we're headed into one other season, and it's something that I know we have to watch out for.
Well, Jenny, you are right. There's one other thing that we got to keep an eye on, and it's Mother Nature. We are officially in hurricane season. So we all know hurricanes can have a large impact on the truckload market. So it's something to keep a pulse on in the coming months.
And you know we'll do just that. Maze, always a pleasure. We will see you next week with an all-new episode of the Transfix Take podcast. Until then, drive safely. All views and opinions expressed in this podcast are those of the speakers and do not necessarily reflect the views or positions of Transfix Inc. or any parent companies or affiliates or the companies with which the participants are affiliated and may have been previously disseminated by them. The views and opinions expressed in this podcast are based upon information considered reliable, but neither Transfix Inc. nor its affiliates nor the companies with which the participants are affiliated warrant its completeness or accuracy, and it should not be relied upon as such. All views and opinions are subject to change.